What up traders, what up investors, Ken here from Dyslexic Investor, and we are going to be looking at some crude futures. We're going to look at some oil and crude price memes, and then we're going to look at a fantastic story from a Wall Street Better user who basically turned a negative $32 contract into a $26,000 profit. So first and foremost, a lot of people don't know or trade a lot of futures. So futures actually are a lot of to do with the commodity. So commodity futures is a whole subsection from other things. So the one we're looking at today is oil, and as probably anyone has seen who has any connection to the internet and is at interest in stocks knows that oil was just slapped across the face, basically having such a surplus of oil on the sidelines and not enough people to buy it, and then have the directive and the logistics to store it. That could be in an oil tanker, that could be on secure sites, that could be whatever. Like, it's just, and has never happened before where this divergence came in, and it really just made a super craze and blew up a bunch of funds. You can look at some of the ETFs that USO is kind of scrambling to try to back the divergence from this month and the roll into the May 20th contract, and it's having an issues down the road. So they're looking for liquidation issues. Again, an ETF can go to zero. It can't go to negative, though. So futures, as we found out, can go to negative. So that being said, let's go ahead and look at some funny Wall Street Bets memes. You can see here the lowest price in crude here, and then if you just slapped a Supreme logo on it, that's $5,000. And this one is one of my favorites. So Ricky is telling the trailer park supervisor to F off for $37. We have the McDonald's dollar menu. You can get a barrel of crude along with your sausage burrito and McChicken sandwich. And then the boys waiting for that V-shaped recovery in oil. And then the new Instsgram show off or flex, instead of a mansion, or a yacht in a mansion, it's going to be a fantastic picture of an oil storage and transportation container. Alright, so that is that, and then we're going to be jumping to the story. So this is LOL Chris Art. This basically posted a couple of hours ago, and we have a lot of diagrams to go along with this dude. So go here, close that down. So basically, again, with oil futures rolling to the following month. So it's like an options, but instead of once these options expire, you get executed actual barrels of oil. So you're actually this is what happens with people who hedge the markets, and the people who are just paper trading it for the financial reasons, they get out before that kind of comes up. So what happened is, looking at this guy's chart, there wasn't enough supply, so the price kept on going down from zero here and just continued going down and just giving it away because it's a contract, so it needs to close at a certain time, and everything just needs to get liquidated. So they're basically just throwing oil at anyone who would get it because there wasn't enough demand on the other end to purchase those X amount of volume of barrels of oils left for that contract, because they weren't completely rolled to the following ones, and there was a little bit of leftovers, and that created that divergent from this month to the other month. You can kind of see here where he got in at negative 30.76. Again, these are not really cheap prices. You can see here on the kick up after hours pretty quick. So then we can look at the situation here. And he made this is a lot of new territory, uncharted space for so many different reasons. This was not even thought of, honestly. So that's why you're seeing a lot of issues with a lot of the ETFs. So he says, thankful for the CME producers, and the final contract settlement is done by cash settlement minus the fees involved in it, instead of not wanting to take physical delivery of the oil, since he is just a trader and he doesn't own a business that requires this refined oil. And it looks like he edited or referenced the wrong research. I was able to exit my trade due to someone else entering the market and buying my contract. The pick is in the final profit you'll see down here. Thank you for all who received the offerings to help me store this product. Best comment to this guy. Loved for all you guys who try to help me with this scenario. So today he traded this with a negative price range before expiration. Almost got choked. So basically this is what happened here. This is his overall position. You can kind of see here of total net profit of $29-ish thousand. So that being said, it looks like he kind of came above this. I hope this is a learning experience for him. This is a super, again, crazy scenario of seeing oil prices below zero, but it was literally paper issues in the sense of moving from the front month to the back month, because usually, again, I'm not an expert on futures because I don't trade them, but when I did a lot of reading and looking into this article, was basically the front months need to be rolled out, and usually they roll 2, 3, 4 days depending on the futures market and what product, 3 or 4 days before it's expiring. So they're starting to roll them. So there's trying to cut down to the least amount of diversion between the front month and the back month. And that really didn't happen due to the fact of a lot of different limits weren't met and things kind of got shambled. Anyways, that's a crazy story. We'll see on what this guy does. I just kind of wanted to talk about some other stuff. We want to look at USO. And this is constantly just sinking today. So we can look here on the daily chart. It's just continuously going down. It's down 30% today. It's not that oil is down this. It's this ETF, the way they had their money leveraged and the way they had it structured. This negative crude oil contract rollover created a huge divergence within this ETF, and they're having liquidation problems. There is many YouTube and a lot of articles regarding USO and how bad the situation is. The one I wanted to point out initially, which was probably gave the most insight to this matter, was the Tasty Trade video from an oil expert, and then another one was from RBN Energy Capital, Rusty Brazil, and I'll link those two down in the description below if you wanted to check them out to kind of give a better understanding on the effects of what happened and really get the facts on what could happen and what actually did happen. So I highly recommend watching those two links that I'll put down below to give them a look at, to kind of give yourself a better understanding, because again, this is uncharted territory, unknown territory, so it's kind of a very strange time, and to have people understand what's going on, more than just the economic downturn of supply and shortage of storage for all this oil at this cheap price. It's just the overall demand as well. It can get quite complex. But again, guys, thank you so much for watching. Don't forget to like and subscribe if you enjoy these videos. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.